into everything this morning. Sorry, I was just a few minutes behind. I just finished up another live session. Morning, Tom. Good morning, Mark. Hey, Greg. HP in the house. Rick's here. James here. What's up, Mark, Gina, and Don? Nice, humid Florida. Oh boy, I'm actually starting to enjoy the weather out here. It's we finally gotten away from 80 to 90 degrees to now it's like waking up and it's in the mid 60s. So feels like fall all of a sudden out here in Utah. All right, what's up, Gil? What's up, Edward? Sandy, good morning. Okay, so just wanted to share a couple of things on Telegram. Posted this yesterday. Couple of things. So posted some screenshots, past resistance, previous lows, drew a couple of trend lines. We're rolling over red this week. Do we take out the FOMC candle low that is right here? This is the FOMC candle low from last week. That would be last week's low. We are going to be opening up, 0.53% lower on the S&P futures. So I'm expecting the SPY to possibly match a gap lower, SPX matching a gap lower. Now the question is, do we gap lower and push lower? Do we gap lower and pull back? I don't know. We'll assess that. Honestly, if we have some broken wing butterflies today that have been lined up here the last couple of weeks in daily profit play, and we hit some profit, I may not be forcing a trade today outside of a reverse iron condor or just doing something that allows this market to flow directionally. Just want to make sure we get a decent fill for it. Because volatility is going higher, right? We made some new highs here with the volatility index. So above the lead up into FOMC, which is around 16.7. We came all the way down after the volatility expiration reset last week. And now we're right back up to the highs. I've got a chart alarm here set at 19 VIX. Do we get to 19 VIX? Do we get to 20 plus VIX? A couple things that are lining up right now. There's talks of government shutdown. We had GDP and unemployment claims come out this morning. It looks positive, but it didn't budge in the futures market. Like this market is, rolling over a decent amount. It's still not even close. This is the crazy part. It's not even close to the near-term correction levels that I'm looking at. So this is all stuff we talked about I'd say ad nauseum the last couple of weeks. I don't know, you could probably sense my annoyance with like how long this market continued to try to grind higher, even to the point of like, are we breaking this rising wedge pattern? And we kind of did, right? I mean, we kind of tested like the highs of it. And if it rolls over, I think this is why this FOMC candle is so critical, because if we test this candle, which means there's still some room to drop, that's around 65.50. If we take out that candle low, spend some time on the backside of this trend line, we could have another flush lower into this 50-period moving average, possibly the 100-period moving average. I still like buying the dips. I think this is perfect for waterfall income. I think this is a great strategy 1 and strategy 2 for waterfall income. I think double ups will have some good opportunities to get positioned for, a rally within maybe a week or two. But I want to take some bites. I think that's what this is going to offer us, as a chance to hopefully scoop up some dips and also position for, whether the dip is immediately at 65.50 or at 64.50 or all the way down here to 6,000. I still like buying the dip. So there are ways to position for that. All right. Looking at this in the shaded background, you have the red and the green. The green represents the bullish weekly candle. The red's representing a bearish weekly candle. And then we have intraday price action with our opening range breakout. So I just drew a couple of trend lines here. If we are on the left side of this trend line, this continues to be resistance, at least in the near term. This is the FOMC candle low. This is a trend line that I've drawn for the last couple of weeks, connected the lows. So if you zoom out here for a moment, this goes all the way back to like May. This goes back into May. So taking this level support, this level support, this level support, this was the July 31st and August 1st correction. This may offer, I mean, there's a lot of choppiness around this zone. So resistance, a lot of chop back and forth here. So I could see 64.27 actually mattering. I could see the FOMC candle low mattering. I could see these lows mattering. But a couple things now, it's if we're going to push lower, are we taking out the FOMC candle? Does anybody remember the JP Morgan collar trade pin that I talked about? That JP Morgan 6,500 gamma pin. If we find it by Tuesday, this like whole notion of like options controlling the market, option flows, That's what it is. Like initially, the collar trade was a resistance level, but we've seen the markets push aggressively through it. So, dealers and market makers are hedging against it as it goes to the upside, but ultimately it still is a massive level of liquidity. And I still think when you look at this is what's beautiful about not just a zero DTE, but going out like 60 days, 90 days, going out to a month or a quarter. The quarterly pin, and we can do this rough math. Like when we start trading next week into October 1st, which is going to be Wednesday, we can roughly guess where this like JP Morgan collar trade is going to sit. It's something that is issued every single quarter. And there are tens of thousands of contracts that are expiring around these big levels. It's usually a 10 to 20 delta call and a 10 to 20 delta put. So when October 1st hits, we can look at an option chain and we can, within probably, I don't know, 50 to 100 points, guess where these like big support resistance levels are going to be for the end of the year. So that means that more than likely, we're not going to see prices going above the call side or going below the put side. So that kind of builds in like natural brackets to the market, natural guardrails for the rest of the year. Okay. So I think that's kind of interesting. Interesting news here. Starbucks is cutting more jobs, closing stores, part of a $1 billion restructuring. Wow. I guess the world needs less baristas, huh? I was wondering, markets are warning about. I mean, yeah, but Rick, this technically was so overdue that it's funny. I actually acknowledged this morning on a morning show that I was on. I said the one thing I wasn't talking about with like why this market rolls over. It's like, okay, we have FOMC. I thought that the dollar would catch a bid, maybe dollar gaining some strength, which it is. If you go to DXY here, the dollar is showing some strength, and dollar showing strength. I thought gives gold a chance to pause, or gold a chance to pull back, and also dollar catching a bid is going to be probably seen as a risk off move. And so technically, dollar catches a bottom right here, right during FOMC, starts to head higher. It then goes into equities as a bit of a pullback, right? But what is the why that's being attached to this? Well, after FOMC, Jerome Powell is still making some rounds and speaking at a Chamber of Commerce event in Rhode Island, and the market's like miking him up and like, oh, he said that the labor market has risk and we're still going to be restrictive and blah blah. It's like the same stuff he's been talking about, but the market now took it differently, or as Rick said, the government shutdown. Yeah, I mean, that wasn't on my radar because look, we fired 260,000 federal workers like earlier this year. So government shutdown, it's like, okay. I mean, I'm surprised we haven't been talking about it every 3 months, because this is how long like the debt ceiling has to get raised, but they've like punted so far this year that like, look, raise the debt ceiling inevitably. And I think they just kicked it out to now, like September, right? So yeah, I guess it's back in the news, but what's going to happen? This whole idea of government shutdown, we've dealt with this so many times. It's the government shutdown. Okay, what do? They furlough and then they come back in 30 days, 60 days. Or the debt ceiling debate. Are they going to raise the debt? They always raise the debt ceiling, but it makes for great headlines. So I think that this was just, it was technically, I was trying to think, like it was technically anticipated, and certainly I've been ahead of it, and probably not in a good way. I'm saying that I'm thankful that this market has rolled over for us here the last couple of days, because obviously I was getting pretty heavy on the positioning with like 67.25, 67.50, 68 and change. Like I was calling the top, and I came to full acceptance of like, I might lose the timing of this. I'm not probably wrong in the sense that we're going to get a correction, but man, I could be wrong by a week or two, and that timing would be everything. So the fact that this is rolling over, I'm I'm thankful that, like, yes, the market is timing out at least within the window that I'm trading the option, right? Because I could be right, but if my expiration was last Friday, I'd be wrong, right? But I did a couple of rolls. I've got some expirations out into the end of the month, which is September 30th, end of quarter, or out to the first part of October, and looking to see if this market will still continue to follow through with a pullback towards my moving averages. So very simple stuff. And also, I want to buy the dip. I think we're silly not to buy the dip, but I'm not all in on a 21 period moving average. I'm not all in on a 50 period moving average. I am looking to use some strategies, give myself some forgiveness, generate some additional income, and let the market have, any space that it needs. If it needs 10% breathing room, if it needs 15% breathing room, if the VIX is up to 20, I can probably get 15 to 20% breathing room and still generate safe income. Okay. So today, in fact, Waterfall Income Strategy 2, we're going to have a masterclass at 1 p.m. Eastern Time, and I will explain why Strategy 2 was like one of my favorites. I could come into the market every single week, give myself a 5, 10, 15% buffer, room for error, still collect income, define risk trade, and take on very few losses. Very few. In fact, I'll probably show you today where we're going to win like 97, 98% of these trades, if not more, but that's over like 12 years. It's not going to be perfect. Obviously, the market can, we can eventually take a loss, but if my expirations are out through, and this one thing we'll talk about today in the masterclass, if I have expirations that are avoiding the typical weakness windows, which is if I don't have expirations through like March and April, those are usually like a pretty good weakness window in the markets, because after that's the pre-summer push, and then August to September, or mid-August to, let's say, mid-October. Those two windows, in my opinion, are the weakest windows in the markets as far as a typical seasonality, because there's animal spirits that lift us up to the end of the year. Markets usually start off with a bit of a correction. Sometimes that's February to April. So anyway, we can time those strategy 2 deployments to make sure that we're hopefully doing our best to avoid any type of big pullback. Okay. Let's see here. Scammed. Oh, sorry about that, David. Let's see here. Donna. Opportunity to do long needed pause correction. Yeah. Let's just face the day for what it is. Okay. Um, I've got some stuff on my charts. My charts are looking a little noisy, which I don't love. But I look at charts every single day, so I can see through all the garbage I have on my screen. I look at price action. A couple things to watch for. Look, we're going to open up with a gap lower today. It's pretty certain that we're going to see a decent, healthy gap to the downside. 657. S&P is down 0.47. It was down to like 0.55 a second ago. So, maybe there's a bit of a near-term low in for the day. We're going to gap lower, go into a smaller time frame here. Here's SPY. 6,500 on the SPX is a nice gamma pin. 6,550 is the FOMC candle low. If we gap lower, that is a gap of about 0.45. So, I mean, it's pretty much matching futures. Here's 0.47 futures, S&P about 0.45 to the downside. Don't assume like this gap lower. Don't assume that this is automatically going lower. Don't assume this immediately fills the gap either. I don't know. I mean, I think what we've been doing here the last couple of weeks is, as the market has been pushing higher and I'm positioning out for those like 6,700s, 6,800s, we should be looking pretty good on a handful of broken wing butterflies today. I'll just review those really quickly. So broken wing butterfly, I did a roll. This is the bull call spread. I'll keep an eye on this one. And let's see here. Call condor that I've rolled out to October 10th, trying to give myself a bit more time in this one. This is looking, better. I want to see where this one like looks to close. So here. Okay, or this at least at the call spread side. All right, these numbers are a bit wonky. Broken wing butterfly. So $1.05. I mean, if I can close this for a 10-cent debit this morning, awesome. Let's close this one up for profit. This one here, $1.10. It's showing negative, but this is out to next Friday. If we're down another, 30, 40, 50 points, I'm hoping that this is a out of the money trade that looks pretty promising for us. The highs were 6,700. So are we going to immediately bounce back to the highs by next Friday? I hope not. I hope that's not the case. We have GDP and unemployment claims today. We have PCE tomorrow. I want to see if there's a forecast on that from the Bloomberg economic calendar. There may or may not be, but I want to see if this 110 can close out for 10 cents. Hopefully it can. October 3rd. This one I have pending. This one I have pending. This one I don't. So I'm going to go ahead and issue this one out for a close as well. I'll just do a 10-cent debit here. Okay. So if I can close this one for a 10-cent debit, close this one for a 10-cent debit. This one is looking better. Max profit here is about 250 because I'm in for two contracts. So 250, I'm up 220. Good enough. I mean, it's right here where the contract's at. It's trading for 14 cents. If I get this down to 10, I mean, honestly, I'm okay taking a 15-cent debit in this one because I went a little bit larger on the contract size. So let me see if this one will fill with today's gap. If it fills at 10 cents, that would be delicious. Okay. This one's part of a bear call spread roll. I actually need to include these together. All right. And keep going here. Waterfall. This is margin for error. So I mean, there's plenty of space. Are we falling down to 5,400? Probably not. Are we falling down to 5,475? Probably not. We falling to 5,600? Probably not. 5,650? I mean, probably not. Honestly, it's like I think that this market maybe absorbs a pullback into like the 6,500, 6,200, maybe 6,000. I don't see us going much lower than that, at least by the end of the year. So, these positionings that we've done for strategy two waterfall income, I mean, they're all showing profit. This one is down a couple bucks. I think like 10 of my 11 or 11 of my 12 positions are showing profit. Okay. But if I get some broken wing butterflies closing, I might change this one. I'm going to see if 10 cents will fill this morning. This one would be great to fill at 10. That'd be worth 250, I'd be 240 bucks. I'd take that winner. This would be 95 and this would be 90. So taking, 90 plus percent of the credit and locking in some good wins. Okay. PCE, that was the estimate. All right, let's see what it shows. So I'm going to look at that's the year over year. More importantly, it's the Ryder Cup this week. So Friday through Sunday, hopefully there's some exciting golf to watch. Let's go Friday. This is PCE in the mornings. Okay, so it's expected to be right as expected. 2.9 was previous, forecasted 2.9. Previous 2.6. This is headline PCE. This is core PCE. It's the core PCE that the Fed is supposedly watching the most. It wouldn't surprise me if it comes in exactly as expected. The PCE here, if we go up higher, right, the year over year is what I pay attention to the most. So are we going to see month over month higher? Possibly. If the year over year goes from a previous 2.6 to 2.7 and it comes in 2.7 or higher, it just shows again like the Fed has room to cut rates. I mean, but we've cut from 4.25, 4.5 down to 4.25. If we're looking at another 100 basis points of cuts, maybe more by the end of 2026, there's still baked in like 4 or 5 more rate cuts. But Powell is not just giving in to being super dovish. We don't know who the official Fed chair is going to be if Powell steps down or steps into the background, and how dovish the Fed is going to be from that point forward. I don't know. But I think right now you have this blend of politics mixing with academics. And I mean, Powell's tone is, I don't think as dovish is what the market wanted. Okay. So if you're feeling stressed about this stuff, go watch some golf. If golf is too boring, hopefully you don't watch baseball and you say that baseball is more exciting to watch. Even though, did you see they're going to put robots in, or they're going to have like an automatic strike zone now, so umpires don't have to call strikes or balls. I think that's probably long overdue for the efficiency of pitching. But do the baseball purists out there like hate the fact they're doing this? I mean, I think humans make mistakes if they're still going to rely on the ump to call safer out at the plate. But I think the strike zone stuff is good. Can we send robots to watch the game? I just put cardboard faces on all of them and fill the stadiums. Yeah, we'll see. So anyway, I guess embrace it, huh? But futures down 0.47. Let's get some levels today. VIX is up. As I mentioned here the last couple of days, we're in a negative gamma environment. It is going to continue to kind of feed this cascade to the downside. We're opening lower today. Okay, we're opening lower. Here's a look at some pre-market levels. I posted this yesterday also in Telegram. So we have some technical analysis here. This is the bigger picture. So you just, look, make sure we see the forest through the trees type thing. There's a 21 period, 50 period, and a 100 period moving average. It's, I could see prices falling to these levels. We have had a straight run up since April, right? We went April 7 bottom, April 9 rip, April pullback, was like maybe a 30 to 50% pullback on that bottom. It was kind of like a head and shoulders pattern. Once we broke above this level, we started to get everything back above. You can see my cluster of moving averages right here. Once everything was back above the moving averages, it was like all signs pointed to buy, 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 buy. And it has been one of the bigger stretches we've seen in a while. Point wise, we got up to 270 points above the 50-day moving average, 280 points above the 50-day moving average. This is why I've been watching that 50-day moving average so aggressively, because I'm like, we're gonna have to find it. And either we stall long enough to find it, or we actually have a pullback and we have a pullback towards it or to it, you know? So anyway, just some levels I posted in Telegram. And then I posted this as well. I went out to a Friday expiration, and this is what I posted yesterday. So Friday expiration, I can show you this on my dynamic trend chart as well. 6,600. Okay, and that's still not even the FOMC low. FOMC low is 6,550. Gamma pin from the JP Morgan College rate is 6,500. So finding 6,600 is pretty doable today from what I'm gathering. And also, I posted this. This is some good news for retail traders coming into 2026. I shared this a couple of months ago, actually, talking with the Tasty Trade team. They have some good relationships with the CME, CBOE, and they thought with the leverage and lobbying they're doing with the SEC that there would be the removal of pattern day trading in 2026. I'm hoping this comes sooner than later. I think this is a big win for retail investors. Once it's made official, then that means that you don't have to have a $25,000 margin account in order to trade every single day. You know, this is why some traders have moved into crypto and Forex and futures, because you can trade as much as you want. Obviously, there's always risk in trading, but my gosh, I cannot tell you how restrictive it is to only be able to trade, 3 times a week. So I get it. I get that it could be difficult, but once that is gone, we can grind daily profit play every single day. And I think this is something that should happen, needs to happen, because my joke is that if you can actually have a casino app on your phone and gamble real money at a casino that is electronically going against you, I mean, the house edge in American casinos is like 58%. It's ridiculously not in your favor. Or you can do a 10 bet parlay for trading, ping pong versus women's soccer versus hockey versus, a slapping contest. And you can do a 10 bet parlay. It's like, I cannot believe that they won't let you trade a risk capital account in the financial markets. That really, if you give yourself a long enough time horizon, they're just designed to go higher. So I'm hoping that this will be a good thing. Okay. And that kind of gets us up to speed where we are. So we'll come into opening bell here in just a minute. Volatility is up. We'll see what happens on the open. We are going to be gapping lower. There's that 6,600 gamma level that I talked about. We're probably going to be close to hitting it with a 0.4. This is going to be opening up around 0.4-ish to the downside. So finding 6,600 is certainly in the cards today. We're going to see a gap here probably around like 6,610. Now, let me do my VIX. VIX is at 17.17. I already have the daily profit play indicator with our box. Okay. So, coming into maybe there's price right there around 60. I mean, we opened up at 60. Wow, we hit it. We opened at it. So just based on the previous day's close, broken wing butterflies filling for 10 cents. Fantastic. Okay, I'm going to go 15 cents on this one here. Just because I went 2 contracts, I'll go 15 cents on this one. So one trade just filled. I had the September 30th, 67, 50, 60, and 80. That broken wing butterfly filled for 10 cents. Let me put that one in the tracker officially. That's a nice win for, should be either 95 cents out of the $1.05 or 90 cents out of the dollar that we pulled in. So that is September 30th. Put this in the tracker here. So 9:30. Uh, 50, 60, 80. That was $1.05. Exited at 10 cents. So keeping that is 95. And the risk on that was 8.95. Okay, that is trade number 475. So daily profit play, DPP update, trade number 475. Broken wing butterfly, it was the 6750 by 6760 by 6780. Entry was $1.05 credit. Close 10-cent debit. So another nice winner there that we'll certainly take. Prices are falling. Yeah, I mean, don't be a hero, try to catch falling knife. If I'm looking at calling the bottom, let's base it on the VIX so we can let price, flush down to the 100% ATR, maybe a little bit lower. I'll calculate that out in just a moment. Let's see how these other trades are doing. So broken wing. This one's still running. This is out to next Friday at 67. This one is, of the dollar, it's already $80. I've got this one set, I believe, 80, 90, and 10. Yep. So I've got this one set at, this is pulling in $1. I'm just going to set this one at 10 cents as well. So that trade should be October 3, 80, 90, 10 for 90. I'm going to try to get out for 90 cents. This one, 68.20. See if I can get out of this one for 15. Okay, these are close. I'm just going to set some take profits on those broken wings. But looking pretty good. Then waterfall strategy 2, still holding profit, just down about $10, $5, no big deal. This one down about $10. This one's up. So far, so good. Okay, let's take a look at our calculated levels. I've got the VIX box low around the 150 ATR. That's 65.60. That would be quite the move. We're right around the 50. We're more like the, let me zoom in here. I mean, we're around like the 80+% ATR to the downside. I mean, don't be too crazy here and call the bottom. Let me see if we can get some premium down here to like 65.50. I know this is way out there. SPX rank, that can't be right. Implied volatility based on the 26th today. 25th is 0 DTE. Chart alarm's going off like crazy. Plus or minus 27 on the day. It's not crazy. 65.50, we do get some spreads there. If I can get a 50 by, I mean, this is way out there and this is well below a 100% ATR. I mean, if we hit the 100%, that's 65.87. We come all the way down here towards 50. I wouldn't mind throwing in a couple of credits there. Two ways we can look at this, okay? Either one is, can we sell above the gap high, right? Can I do a 66.40? So I'll take a look at all these levels. 66.40 is an 11 delta. If I went 40, 45, that's a 11 delta. Could I get filled here for $1? The reason I'm not being super picky on today's daily profit play is we're hitting profits left and right on the broken wing butterflies. That's why I position for those pretty aggressively. Okay. The 930 trade early. No, because if the 930 trade is showing profit there, CB, then yes. But the 930 trade, I'm looking to either keep that one alive or roll it. Let me see what it's offering right now. So this waterfall 930 trade is here. Okay. So why would I close it early when it's still red? Like, I mean, I need this to stay below 66.40. We're trading right now at 65.92. If we drift down to 65.50, I mean, this probably shows some profit. So, this is Tuesday. So depending on where we are for the rest of this week, I mean, the good thing is we're at least 40, 50 points below where we need to be. And given, tomorrow's PCE, maybe there's a, let's see what the option looks like tomorrow. I mean, plus or minus 46. I mean, it's still at the, 20 delta, but mechanically speaking, that looks really, really good for us to stay below 66.40. This actually might turn out to be a nice win. Like, this might be the 225 to 230 credit that we pulled in. If that's the case, like, I'll know more about this on Friday, and then we come into, Monday, Tuesday, see if this trade just survives. But so far looking good. Okay. All right. So let me look at some levels for today. So prices are falling. Could I sell the 40, 50. I mean, I might look at maybe a butterfly spread. So I wouldn't mind positioning for, let's go like, let me look at my ATRs here that I have in my DPP. So my daily profit play box, a 150 to 200% ATR. I'm going to look to see if we have some type of 65-60 to 65-40 bull put spread. I mean, again, this is kind of bottom picking. You got to be careful here, but is there a natural bounce to this market? Is it pushing down too aggressively? Let's find out. So if I did like a 150 ATR at 60, can I get some premium? If I get $1 out of a 5 wide, I'm okay with that. So 65-60, I can get $1 on that trade. If I wanted to take a little bit less risk, then obviously I would try to go for a higher credit or move my strikes a little bit lower. I think 65-50 is a reachable gamma level today. I really do. So I'm going to see if we can go 50. There's two ways I can do this. I can either one, set it up for just a bull put spread and do the 50. So 50 by 45. If this trades for $1, keep an eye on this one. That would be 65-50 is below a 150% ATR. I mean, that is quite the move on the day. So this can get us filled for $1. I don't mind taking that at least like stab one. So 50 by 45 for $1. I'll put this in as a pending order. Okay, daily profit play, selling the 65.50 put, buying the 65.45. It's trading for 70 cents. If price falls a little bit lower, we get filled for $1 and price doesn't threaten that low or at least close below it on the day. 50 and 45. If we went 45 and 40, same thing for $1. And that was 40.35, and then a 30 and 25 for $1. So I'll get those put into the alerts for pending. There's just 3 bull put spreads for $1 each, 5 wide. I'll put those in just a moment. Okay. The other way I can play this is looking at a broke wing butterfly. If I thought, you know what, I could have this thing kind of pinning around the 50 handle. I don't want to take a crappy credit. So if I buy, sell, buy. Okay. Right now, I can control the risk here. If I did let's say $1 on this trade, I can get up to $600 of profit if I'm right at the lows. What would the sell-off be actually on the day? If we go from a close yesterday all the way down to 50, that's a 1.3. It's like 1.3% is pretty doable. Maybe we shouldn't call the bottom here, huh? All right. Before I just dump into all those positions, let me see something. I'm just gonna take a beat, try to figure out where we go from here. So if we sold the 66.40, very small deltas here. Let's see, 30. Gap fills around 35. Let's go 40, 45. Keep it a little bit tighter. Okay, can this one go for a $1 credit? Put that in for a pending order. I'll get these in the Telegram in just a second. Okay. If you want a simple daily profit play, maybe the reverse iron condor could work as well. There's just price is going to move quickly, and those trades, need time in the day. The other one would be if we're 65.50. Let's see here. Could I do what's my 200% HDR? 30. If I pin this thing around 30. So buy, sell, buy. If this gets filled for $1. Okay. So I'm going to do a trade like so. Let me see if I can get like a tight dead zone. Let's go 80, 85, 70, 65. Look at this thing. If I did let's see, make sure this is correct. So if I do the 70, 75, 85, 80. So 15 wide, I'm going to get about 550 for it. If I go 20 wide, not awful. For this is for the inverse or reverse iron condor. I wouldn't want to take this trade for less than like 580 or 590 credit though. And that'd be a 20-point dead zone. We'd have to stay below 70 or get back above 90. Just seems a little volatile. I'm unless I can get over $6 on this trade. 65. Hmm. I'll hold off on that for right now. All right, here's my position. I don't have anything filled yet. I'm just gonna wait. Bear call spread. Is that a bull put or a bear call? 50 and 45. So Greg, how'd you get a bull put spread close for profit when price has been dropping the whole time? Like usually, I understand if like you took a bull put spread and price goes up. So you did a bear put spread then. What? 50 and 45. I don't know how that was a profit, dude. Just got filled on a broken wing. Dollar credit. Okay. All right. So broken wing just got filled. This is the October 3rd. This one that just closed out for zeros. This was closed out for $230. Max was 250. I closed out for 230. I'm happy with that one. That is the 10-3 expiration. That is the 68, 20, 25, and 40. And close that thing out for 15 cents. So that's $1.10. Nice win on that one. Okay, so the 50 by 35, David, for $1. Filled bull put 50 by 45 for $1. Okay, gotcha. All right. So if you're in the 65, 50 by 45 for $1, that's a good fill. That two reasons I like the trade. One is it's well beyond the 100% ATR. So it's going to be difficult for price to still get there. Although this is a pretty obvious gamma level, we could certainly test it. Okay. Just be prepared for that. But if you're getting filled for $1, here's the safest way to manage that trade. If you get filled for $1 and all of a sudden it's showing 50 cents debit, I'd say close the trade. You know, if price from there goes up, if we gap lower, slide down through the 100% ATR, and then we go back up, let's say another 10, 15, 20 points, if that dollar credit is trading for 50 cents, 40 cents, like take the profit. I don't think it's something you want to flirt with all day if this is going to keep sliding lower. Okay. Okay. All right. So let me see what we're looking at here. So the 50. Yep. So for $1 there, that's not a bad spot. So we got a couple working orders here. I'll post these in Telegram. There are two broken wing butterflies that I'm looking to get filled on. Let's see what trade did just close out. Trade number 483. So DPP update. Trade number 483. Broken Wing Butterfly. That was a 6820 by 6825 by 6840. Entry was $1.25 credit. Close 15 cents debit. Okay, so taking a nice win there. And I still have another broken wing or so that I'm looking to close out for profit. Okay, trades for today. Pending order for today. I'm doing the 925 expiration, buy the 6640 call, sell the 6645 call, buy the 6655 call, $1 credit. SPX 925 expiration, buy the 6535, 6530, 6520. This is a combo. Okay, so that is in the Telegram for daily profit play. So broken wing butterfly on the call side, broken wing butterfly on the put side. They're not filled yet. I can simplify this and just go straight with the credit spreads, which I haven't taken a trade yet. So let me see if I can reposition for just the credit spread side. So the 50 by 45. So already, who's in that trade, by the way? Who's in the 50 by 45? If you got filled for $1, it's already trading for 70 cents. If this is down to like 60 or 50 cents, not a bad spot. Just take the quick win. Okay. So I will keep an eye on this one. If you're in at the 50 by 45 for $1 and you get 50 cents or better, right? I think that's a good trade. So keep an eye on this one. Let me know if you close this one during the session. Okay. Nice, David. You got the 40 by 35 for $1. It's even better. So if you got the 40 by 35, you're already up 50%. Not a bad one just to take and run. If you got filled for $1, you're trading at 40 cents or 50 cents. That's a quick win on the day. I'd be happy with that. Get out of this wild and crazy volatility. We'll see what happens. But those are good. Okay. So far looking good. And if you got filled on those bull put spreads, that's what you wanted to see, because this little market reflexively going higher, $1 credit is going to be shown for a lesser debit. Protect it. Okay. Don't try to be a hero and keep the dollar today. If you get $1 and you can trade for 50 cents debit, 40 cents debit, 30 cents debit, take the profit and be done. Okay. All right. So let me know if you're closing out those trades. So what I have is a pending. I'm going to do a broken wing on the put side. So here, if this is my trade. So price is right here in the middle. I'm doing a broken wing call fly, and I'm doing a broken wing put fly. Neither one is filled, but my trap would be down here on the put side, and my trap would be up here on the call side. But I will wait and assess. But we are getting some additional profits on those broken wings, which is nice. Just spot check those really quickly. Let's see here. So one close for profit. This one's still running. The 6,700 that's next Friday. This one is by next Friday. This one's up 75 of the max dollar. I'm going to let that one go down to hopefully 10 cents or less. So that's an 80, 90, and 10. That was I'm sitting here pending at 10 cents. So hopefully you see that one get filled. This one closed out for profit. That was a winner of 230. Then all the rest are waterfalls. Okay. So we're getting some of those broken wings closed out for profit, which is nice. Trade number 487 is a winner. Trade 486, 20, 25, and 40 for October 3rd. October 3rd. Okay, that one closed out. Very good. So the 80, 90, 68, 10, that one's still running. And yeah, this is good. So just a couple more broken wing butterflies remain, but so far so good. Like I said, I'm like thankful on the timing that we're able to go out either high enough in the option chain and obviously enough to get through FOMC and have this like end of the month type look at this market's going to pull back. Okay. Did anybody close out for profit? I'm hoping that you did because I'm telling you, like, don't be greedy on this thing. This is probably going to find 65.50. This is a pretty large gamma level on a zero DT chain. It just wouldn't surprise me if we find it. So what I'm looking for is, can I get filled at something that's slightly lower around that 150 to 200% ATR? And also, if you're considering maybe going a little bit lower here, it's like I don't see prices oftentimes get below all gamma levels. It's very difficult to do that in a 0-day environment. So if we get let's say a 45 by 40 or let's say a 40 by 35, something in that arena, that might not be a bad play either. So if I looked at the, 45 by 40, not quite at $1 yet. If I did a 40 by 35, I could probably get $1 on that one. But I've got the broken wing. That's a 35. I don't want to overlap here. So I could do the 45 and 40. That wouldn't overlap on the put side. Let me see if I can get $1. I'm either going to get like $1 to $2 on this trade if possible. So how far can we drop? Let's go 5-minute this morning. So we're at the 100% ATR. Can we drop? This is my VIX box around 65.60. Volatility index is still slightly higher. We could drop into I don't see much below 65.50. So that would be kind of the target for the day. If there's any bounce, like look left on the chart as well. If there's any bounce, there's the FOMC low. If we come down to it and test it and we bounce, again, like good spot to have some bull put spreads. Take that partial profit if that's going to be a pretty safe low. Okay. So 45 and 40. Not bad. And then a broken wing. I'll keep an eye on that. The broken wing is going to be tough to get filled at anything more than like 50 cents or $1 today. So I've got it sitting at $1. It's trading right now for 20 cents. So price can fall a little bit lower. This 45 and 40 is not a bad way to start. There's no overlap there. So I can go 45, 40. I might try this one for $1. And then I might put a second contract in for like a $3 to $4 credit and to see if that level is in fact defended. Okay, so I'll put this one in. This will be another pending order. SPX 925 expiration. 6545 put. 6540 put. Dollar credit. Okay, there's also FOMC candle lows. That's in Telegram. Does this fill for a buck? Let's see, maybe I can get a bit more credit out of this. I'm going to put this one up to like a $1.50 and just keep an eye on this morning. So go pending for $1 credit or $1.50 credit. It's trading for 70 right now. If we fall down, here's what I'm going to look for. If we fall down, I'll watch this in real time. If we fall down to 65.50, I'm going to look to see what that thing is offering. If it's offering greater than $1, I'll take whatever I can get over the dollar. I'm going to put a pending order in at $1.50. That way, worst case is I'm risking $3.50 to make $1.50, and all price has to do is just not stay at the lows of the day. Okay. Now, one more thing I wanted to calculate. I mean, the VIX is 17.45. When we opened up this morning, let's go to the 9:30 candle on the VIX. We opened up this morning around 17.24. About a 107 or 108 move on the day. I mean, that would be beyond the VIX based on the previous day's close. I mean, that would get us down to like a 1.27. So I think we can kind of contain that. So I think a dollar to $1.50 is great on this trade. I'm going to keep an eye on this one. Okay. Look, it's okay on those trades. If you got filled for a buck, keep an eye on it. Because look, if it ends up going down here, stalling. Remember, you're 30 points clear of 65.50. If this is your sell put and it stalls here and goes back up, you're going to be fine. Okay. The only risk you'll take on is if price ends up falling a little bit lower, hitting 65.50 or so. That is a 1+% correction. Look, based on the VIX, we're looking at like a 1.08% move. Okay. Now that should be based on the previous day's close. Obviously, since we gapped lower, it might be able to stretch a little bit lower than that. But I would tend to think there's some reflexivity in the market, and that 65.50 is the low from the Fed. FOMC low was 65.51 or 65.52. So I think the trade's going to be fine. You're 30 plus points clear of it. If price just stalls right here, your dollar credit's going to decay. You'll trade for 80 cents, 70 cents, 60 cents, 50 cents, as long as price just chills out here. Okay. So I think we're going to be fine. All right. Is anybody closing out those broken wings with me? Who's taking? I mean, did you take the trades with me? I know it was a little bit different. It wasn't a daily profit play, but it was. I mean, I issued it as daily profit play alerts. But those have been good trades. I mean, that was a nice chunk of winners. 220, 200, 220, 100, 170, 120, 180, 110. Those have all been pretty good winners. So even taking the losses that I took on Monday, so I got beat up on Monday a little bit with the crazy move to the upside. Even just going back to the last stretch of trades, I mean, I'm up like $1,900, even with those losses from Monday. So that's not bad. But like I said, I'm thankful that the timing and price is not going too much higher than 6,700. So far, so good. Okay, nice. Marcus is close to yesterday for 10 cents each. Very good. Okay, let me know if you're still in that bull put spread at 50 by 45. What is trading for right now? I can look at it here. The 50 by 45 is in profit. You've got about 30 to 40 cents of profit. So if it gets to 50 cents debit or lower, I think it's maybe smart, maybe wise, just take the profit. And now price is heading this. I mean, and again, this is so sensitive in a 0-day environment, but right here, if price is going green, you're going to see some profit on that trade. So right now, that dollar credit is already showing 50 cents. So if you want to take it, get out of here for 50 cents debit, 45 cents debit. Not a bad spot to take it, move on. Okay, so let's get some winners there. Okay, Mark said just close at 50 cents. Very good. If they didn't fill, exit now. Well, if you're in the trade for $1, I'd put the take profit at 50 cents. That's a smart trade on the day. You're not letting the risk continue to go all day long. So yeah, I mean, if you can close it out for 50 cents debit, that's a 50% winner. Take it. I don't think it's a bad trade at all. Okay, I can set a let me set a chart alarm here to see if we get back to this intraday gap. So if we're trying to come back in to fill this gap, that should be like, the dollar credit is probably going to trade for like 40 cents, maybe even 30 cents there. Take most of the profit. I wouldn't let this one sit all day. If you've got a quick like 50, 60, 70% profit, I would just take it. Okay. But time is good. I mean, like I said, you're now 40 points clear. You're 40 points clear of the lows. And you're going to see that the expected move is not going to be 40 points. The expected move for the rest of the day is about 25 points. So it should be, I mean, probability wise, you're looking at like an 85, 86% chance it stays out of the money, which is what you want. Right? That's a good probability right now. Okay. Let me set a chart alarm right here. Do we come back and try to test this gap at all? If we test this gap, I would close out that trade, whatever it's offering. It's probably going to be $1 credit down to 40 cents debit, maybe 35 cents debit. There it is. It's already at 45 cents, 40 cents. I should see some closing in the chat. Okay. So I've got to ask, I'm always curious. Are you closing it? It's trading for 30, well, no, 45 cents. How many of you are going to take the risk and hold on to this thing all day? I know some of you are going to do it. It's okay. I'm just, I always want to know because I get it. Like the enticing is like, well, I got it for $1. It means I can make $100. You can, as long as price doesn't come below 65.50. But when you can get 60, 70, 75% of that max credit, and you can do that in the first 30 to 60 minutes of trading, I don't think it's worth the risk. Take the majority of the profit, celebrate the day, and go enjoy the rest of your Thursday. Like not much else is going to happen that's going to be good other than it's going to chop around here for the rest of the day. So, okay, Davis has closed at 50 cents. Very good. Okay. Nice, nice, nice. Let's see. So I put in that call fly at 45, which would be coming all the way back to the gap fill today. Make sure I'm not, and I might end up just removing some of these trades. I mean, that is two broken wing butterfly winners that pairs with the other one. So we have a winner there, two winners there. So that's 4 broken wing butterflies closing for profit. Yesterday's daily profit closing for profit. Okay, those were closed out. Yeah. So that's 4 broken wings closed out. I just don't feel like I need to be forcing a bunch of trades. Also, just based on the VIX, the VIX is dropping hard, and this market may be able to come back and fill the gap. I'm going to get rid of, if you're looking at those broken wings with me, probably the smart thing is just to cancel. I'm going to cancel them. because if we come all the way back up to either one, the gap fill, okay, or two, this high volatility, this is a gamma pivot point between going negative, positive, gamma. If we come back and hit this or find this, that's going to be putting on risk on my broken wing butterfly to the call side. So probably the smart trade is just don't force anything today, and I'll see if I can maybe sprinkle in another credit spread. Right now, that dollar credit spread is trading for 35 cents. So if you're wanting to take the profit, put in a 35 or 40 cent debit, take 60, 65% of that. Bear call spreads, if I would consider a bear call spread as long as I can sell higher than like 66.50. If I'm going to do a bear call spread, I want to be selling up here. I want to sell anything above here. So if I'm going to sell a call, it'd be up here. If I want to sell a put, it'd be either the 50 zone, which we talked about this morning, or slightly lower. And then price can kind of chop around in this zone for the day. Okay. So quick update. Uh, 10:08 a.m. Eastern time. I'm canceling. The $1 credit 6550 by 6545 bull put is now showing 40 cents debit or lower. Protect profit. So bull put winner today. Two more broken wing butterfly winners. 4 winners this week. Not worth the risk. Okay, there's your dollar credit now trading at 30 cents. It's not a bad time to protect it. Out for a winner. Okay, you missed the first dollar fill, Randy. Okay. Just keep an eye on it. Chart alarm, SPX 6603. That is the gap fill. Yeah, so we're starting to fill that gap a little bit. So I'll look at a couple of trades here. The reason I'm just removing some of my zero DTs is because if there is a run into this gap, it's pretty open space here, right? I mean, could we come back in and fill the gap? Sure. Could we come back and find this positive negative gamma? Sure. Could we gap lower, pull back into this gap? This becomes resistance in the market, kind of rolls back over again? Sure. So if I'm going to sell, like, i.e. bear call spread, a 66, like 50, 55, or 55 or 60, like get it up into this zone. This market, if we go to the lows, I want to make sure, VIX is smashing. We're now sub 17 VIX. So make sure this is at least less than, this would be fine, because see how this is like a 1.16% move? I don't think the VIX has the ability to make that type of move. Based on the VIX at 17, even at 17 and change, we shouldn't go 1.15% from this low. So if we can get a fill on the like 50 or 55, I don't mind that trade. This would be the 66.50. So 66, 50, and 55. That is it's still a little, I'm going to go 60. I'm going to go a little bit higher. I'm going to try the 60, 65, which may not fill, but we're going to try it. I'm going to try this one for $1. 66.60 by 65 for $1. Okay. So that is a 60 by 65. We'll try the 70 by 75. See how these look for $1. And then on the put side, I'm still keeping the 45 and 40 available for $1. It's not filled yet. Okay. So right now, I'll just do a quick update here. Current trades are pending. And I'll just take a screenshot. So right now, these are my pending orders right there. Take profit on the 6550 by 6545 bull put. Pending orders 6545 or let's see, was that a 40? This is a 0 day, so sell the 6545 put by the 6540 put. Dollar credit. SPX 925 expiration. And then the sell 6660 call, 6665 call for $1. Six 670 6675 for $1. Pending. All right. All in. Okay. Overall, we'll keep grinding. No, I'm going to keep that one. So the 40 by 45 still open. It's just pending it. Now it's trading for 25 cents. I got it pending at $1.50. I'm actually okay with that one getting filled for $1. $1 is fine, but I'm going to watch it. So between these three, if one of them takes for $1, that's hopefully another chunk of change on the day. Okay. All right. So where are we at? This is SPY 15 minutes. Let's go SPX. Gap lower. FOMC candle at 65.50. Do we find it by the end of the week? Maybe. Do we find it lower? That 65.50 gamma is a pretty big one on the day. Is it hit? I mean, I'm curious what the market's given us today. Does it give us more news? Just a bunch of tech under pressure. Okay. That's it. Investors reassess rate cut hopes. I mean, we're not cutting rates. Like, what are you talking about rate cut hopes? We're cutting. We're cutting in October. We're cutting in December. 1, 2, 3. That's a big change. Look at this. This is a big change. So this just means that going into 2026 and 7, it's like the Fed is done. So this would be rate cut 2, 3, 4. Aha. So the markets were looking at up to 6 cuts. Now this would be slashed to 4 cuts from what we see now. 2, 3, 4. I guess this would be up to 5, 4 to 5 cuts. We saw as many as 6. I think now it's just being revised down to 4 and 5. That's what the market's kind of battling with. But nevertheless, that bull put spread good, right? 65.50 by 45. What's it trading for? The 50 by 45 is trading for 20 cents. Get out of the trade. I'm just saying, like, it's not worth keeping the trade on for an extra 20 cents. Take the profit. Let go actions for the recording. This Zoom session, if it's not running streaming live on the YouTube session at the same time, then we'll take this recording and post it in my. It'll be a YouTube session on youtube.com/financial wars under my daily profit plan playlist. So that's youtube.com/financial wars. Cool. Okay. All right. So I'll keep an eye on these for the rest of the morning. I'd like to switch gears here. I do have a masterclass on waterfall income coming up this afternoon. We did strategy 1 on Tuesday, and we will do strategy 2 today. Daily profit play, I will have a masterclass tomorrow. So if you're, kind of liking this, trade every week on waterfall income, a little bit less maintenance, trade every day in daily profit play. We're pretty flexible on strategies. There's about 3 or 4 core strategies that I use in daily profit play. Waterfall income, I've got that thing locked into 2 strategies that are very useful. And we've got open positions now, but all looking for some pretty good profit. Okay, final hour. It is Donna, but it's just been harder to do it. Honestly, it's like my 5th or 6th live session of the day. Sometimes I'm like, I'll post a video on TradingView and then put it in the Telegram. So I'm still going to do it. I just don't know if I can commit to doing that every single day. So today should be fine today because I'll finish up the masterclass for waterfall income. We'll probably just roll that into the final hour session. Yep. Yeah. So when I like to do the daily profit or the final hour session, it's certainly when I've got trades running to the end of the day. But either way, like it's still going. It goes live on my Discord channel when I'm live. If you're subscribed to my YouTube channel, which is youtube.com/Chris Pulver, I mean, if you have the notifications, it pops up on your phone. So I mean, I'm live usually 3 times a week with that, but I was live 5. It's a lot. There's a lot of other classes going on. There's lots of other collaborations that I do. And by the time it's like yesterday, I was at a doctor's appointment for my son, so I was gone. But that happens. But at the very least, there's going to be content through the week. I posted on TradingView, which was on YouTube, on Twitter, and everywhere else. So yeah, I'm trying to keep us all informed. Okay, what I'd like to do before we are wrapping up, it's like I'll keep spot checking price here. Waterfall Income Masterclass today at 1 p.m. If you'd like to join me, all current members are welcome. If you'd like to become a member of Waterfall Income, trades that are running right now for profit, we have a good chunk of profits that are still running. Let's see here. Looking good on our September 30th, and then looking good for November, December. By the way, all these trades, we're giving ourselves about 15% room that if the market doesn't drop and exceed more than 15% and stay there, okay? It could drop 10%, but as long as it doesn't stay there by the end of the year, which I think animal spirits wise, we tend to have a pretty good finish to the year. These are all going to be profitable. So, we've had, let me see at the trackers for waterfall. So I don't know the last loss that we took. The last loss that I have on my strategy would have shown it was an April 4th expiration. That was our last loss. So April 17th winners, 17th winner, April 17th winners, April 25th winners, May 2nd, May 16th winners, May 30th winners, May 30th winners, May 23rd, 620, 620. These are all in June, June 30th, 718 winners, all the way to now. These are all winners. So, we had some, I guess, poor timing. It wasn't poor timing. It's just the market was nuts during Liberation Day and that like March to April decline. So we had one chunk of losses. It was like 2 trades that I lost for the entire decline this year. But every other trade leading up to that, every other trade after that has been winners, and we're sitting on like 10, 11 trades that are looking great. Okay. And yes, the Ryder Cup is tomorrow. By the way, I'm not going to have the volume on, but tomorrow morning I probably will have like the Ryder Cup playing on my phone. So I don't know. It's like my sister lives in New York, and she's actually traveling this week, but she's actually sent me some pictures. She sees like all the crazy like decoration stuff all over New York, like downtown New York, and then out to Bethpage Black where they're hosting this year. I have not played that course. It's one of the hardest public golf courses in the country. I think it'll be a cool venue to have. We'll see. The amount of experience the European team has, but man, that crowd's going to be, I don't know. Yeah, I think you're gonna have some sound bites that'll be interesting. It's going to be a pretty rambunctious crowd to say the least. So, all right, we've got some trades to focus on here. Let's see if we have some additional fills by the end of today. I do have some pinch point scanner alerts to go through today. There's like 50 plus on my scanner that are showing in the go zone. So I'm going to be pricing those out this afternoon. I'll share that in the alerts section for Pinch Point. Waterfall Income Masterclass at 1 p.m. Let me talk about that right now. We've been talking about this a lot for the week, but I just want to introduce you to a strategy that is something you can come up and trade once a week with me on Mondays, 11:30 a.m. like clockwork, and we can set it in for a strategy 1 or a strategy 2. You know the reward and risk. You've got the probability of profit. Everything is laid out in front of you. It's a very low maintenance trade. Probably one of my favorite strategies to teach anybody, like a very straightforward approach into options, and also a strategy that is taking advantage of like the market's phenomenal. If you dollar cost average in while the market is, up, down, or sideways, it's designed to go higher. And it's been like a 70 plus year phenomenon since options have been around since the 50s or the 70s. Since options have been around in 1973, you can basically leverage your capital without putting much more at risk and get some pretty steady returns. And that's what Waterfall Income does. So I'd like to talk about that right here. Let me find my, here we go. Okay, so we have talked about this all week, and I'm, again, opening the doors for more traders to join me. I've done the study. This is a 12-year study. If I could take this thing back 30, 40, 50 years, I would put this strategy up against anything. We have over 100 trades issued in the service. We have 92 winners at 93+%. We are looking at probably trades 93 to 105 closing out for profit here in the next 30 to 60 days. Average